purpose of this live stream, or this video if you're watching this later, is to help those that are looking to buy, sell, or invest in real estate in this crazy market, amidst crazy, insane situation in the U.S. and the entire world. If you find yourself in a group of people that are looking to buy, sell, or invest in real estate in Southern Utah right now this spring, this video may be for you. And in addition to sharing the usual numbers, I would also like to point out a few bits of advice to those of you that may be looking to do any of the above in this challenging market. So if you're new around here, please do me a favor and hit that subscribe button and the notification bell right next to it so you don't miss any of our other related videos that may be instrumental to your real estate decision later in the future. If you need any help, my contact information is right below framing this video. Folks, what do I mean when I say crazy? If you were previously just scrolling the feed, or if this video just popped up in your suggestions, chances are that your feed is filled with the same things. Inflation rate is at all-time highest, nearly 40-year highs, depending on which numbers you go by. The Fed is hiking the interest rates, and median interest rate, I think for prime, is right around 5% right now. Fuel prices are at all-time highest, or probably near all-time highest. They're around a little over $5 a gallon in Utah right now. I'm not sure what they are where you're at. So if you're watching this video somewhere outside of Utah, drop the fuel prices in the comments below. And Brendan and his friends are talking about real possibility of food shortages, and the situation in Ukraine and Russia is absolutely insane, and it is slowly turning into World War III. However, this video is about our real estate market right here in Southern Utah, which is still soaring, and it doesn't make a ton of logical sense right now. Partly it does because a lot of people are escaping insanity, and a lot of our clients are moving here from all over the place. So if you find yourself within those people that are researching Southern Utah and you're thinking about moving here for a number of awesome reasons, like overall cleanliness of a community, family values, schools, low crime rate, amazing weather, and many, many, many other reasons. I'm sure you already know if you're tuning into this video for that. Anyway, if you find yourself moving into this area, it can actually be really challenging to buy or even sell or invest in real estate here right now. And there are several reasons why it could be tricky. Number one, our inventory is really low. Number two, things are moving really, really fast, and there are typically 5 to 10 buyers for every listing that hits the market, provided that it's priced right and it is a great home to purchase. So without further ado, let's just dive into the numbers and talk about how our real estate market performed in the month of February. It is March 26th almost. This month flew by. So I wanted to share with you guys some of the numbers just to show you what we're working with here. So it'll make a lot more sense when I'm making other references to this market. So in the month of February, we had a little bit less than 1 month of supply, 0.93. So in less than 1 month, if new listings stopped hitting the market, we would sell out of all available inventory. Average list price was over $1 million, folks, and this number sounds really high, but it is relatively easy to explain this, and I'll get into it later in this video. But our average list price was $1,141,795, which is crazy high. It is up by nearly 41% year over year. Our average sale price, well, let's actually go with the median. Our median sale price was $563,000, and our median combined days on the market was around 13. So things are still moving really, really fast. Total number of sold listings was 341. Total number of listings that went pending or under contract was at 395. Active listings were at 399, and new listings were at 515. And typically, the month of February is a little bit better with listings. We're starting to see more listings because the third week of February, second and third week of February, are the parade of home days. So a lot of people come to Southern Utah for this event, and a lot of sellers are naturally putting their homes in the market. So we see a slight uptick in inventory, which is nowhere near supporting the demand that this market created. Another important thing to point out when we're looking at these numbers is the list to sold ratio, or sold to list ratio rather, because that number may be a great number to know if you're looking to make an offer in this crazy market. So in February, our sold to list ratio was at 98.8%, meaning that pretty much every listing sold within 1.2% of asking. So pretty much things are going under contract for asking or higher, with a few rare exceptions. So I wanted to go over some of the things that I would advise in this market if you're looking to buy. And there's just some really basic things that might save you a lot of grief and hassle. So we're talking about shopping for deals in this market. So shopping for deals in this market might not be the best idea, that may not benefit you, because oftentimes when you find that deal, it is thank you guys. I appreciate you letting me know the mic sounds better. And I apologize for those of you early on in the stream if my mic was just awful, but forgive me. Anyway, shopping for this deal in this market might not be your best interest, because what happens is if you're constantly looking for this next best deal that may be just too good to be true for the market, chances are it is. And while you're chasing that next best deal, you might just get priced out of something that was within the realm of what's possible. From what we're seeing, it seems like things are just continually going up and up and up in value, and it can't go on indefinitely, but the purpose of this video is the immediate need. Like, let's say you're looking to make something happen right now. So I would say, and going into my next point, you have to have clear expectations. You have to kind of understand what can you afford. If there's a mortgage involved, it's good to talk to your loan officer to figure out exactly what your principal with interest and taxes and insurance, if you're escrowing those things, what is that going to look like from a monthly payment perspective? Just making sure that this is something you could actually afford and something that fits in well within the rest of your budget, as well as figuring out, okay, like this is what a $650,000 or this is what a $1.2 million home looks like. Are you okay with that? Is that a realistic thing? Because if you have the expectation of being able to get into something that's really worth more like 1.2 million, but your budget is around 650, you may be forever disappointed, and you may again get priced out of this market. My next point is be ready to perform. It's important to spend some of that time for your initial due diligence, figuring out which neighborhood do you want to be, which neighborhood can you afford, which neighborhood works best for your needs, which neighborhood is within that ideal socioeconomic status. You go through all of those things by typically just kind of driving around or figuring out where you want to be. And then once you're comfortable with, okay, yes, we can afford this home in this price range in the neighborhood that works for us, great. You may be ready to make the decision. You may be ready to perform. Another thing that goes into it is a lot of our clients are in a position where they're selling a home, and they're selling a home, let's say, in Seattle, Washington, or in Portland and Oregon, in California. Most of these markets in the Pacific West are still really, really hot. And a lot of people get this almost like overconfidence. I know that my home is going to sell in a week or less because my neighbor's home just sold in that period of time. However, it is not on the market yet. We need to find something first. And what often happens in those scenarios, you find something you really love, but the seller may not be open to a contingency offer because 5 other people really love that property. So my best advice for those of you that are just beginning your shopping and you haven't quite yet, maybe you haven't staged your home, maybe you haven't even talked to a real estate agent, my best advice to you is be in the ready position. So if you're coming to Southern Utah, you're looking at something, it is best to have your home, or maybe you're moving here, maybe you're downsizing, or maybe you're upgrading, whatever the case may be, it is best to have your home in a ready position where, even if the market timing is 7 to 14 days, like here in St. George or wherever you may be moving from, you have to be in that position where if you know you can list your home in the market, it's going to go under contract, or you may get a couple of offers to choose from, when you're presenting this contingent offer, and folks, when I say contingent offer, it could mean different things in different states. Here in Southern Utah, contingent offer means that it's an offer that is contingent on the sale of a residence prior to you being able to purchase another residence. So there's some contract provisions that protect you as a buyer, but also these contract provisions make your offer, in some cases, less appealing to the seller because it gives you room to escape in the event, especially in the event of the sale of your home falls apart. So can't stress this enough. If you're thinking about making a contingent offer in this highly competitive market, it is a weaker offer. And what makes it better for the seller is if your home is already under contract. Avoid those offers as much as possible in order to be successful and not have to give up too much ground. Make sure you're making a compelling offer. So it's good to have a person you could trust, a real estate agent that could do market analysis for the neighborhood, that could kind of tell you what things have been selling for. And another thing that's great to watch is list to close ratio, like the list to close ratio that I was talking about earlier when we were looking at numbers. Most deals happen within just a fraction of a percent, plus or minus, really, really close to asking price, often over asking price. Now, this is just a general market approach. If we look at the market as a whole, if we look at the total number of sold listings that sold in February, you can see that majority of these sales were in like $500,000 to $750,000 price range. So, for instance, a number of active listings, this is actually a better thing to look at. Number of active listings, the volume really increases right here from $500,000 to $749,000. The reason that happens is an average builder, people that are helping inventory, people that are building spec homes, the general rule of thumb is in order to not overprice or underprice a spec, you would want to price the final product, the home, about 4 times the value of the lot. So land is becoming more expensive, and so do the supplies. So it kind of makes sense that majority of that inventory that is available right now is really getting up there in price. So this is where you're going to start to see more inventory, and this is where deals may begin to happen closer to reality. Although I have been bid out on, one of my clients wanted to offer on a home that was in the $750,000 price range. We offered $50,000 over asking, and our offer got bid out. So those things are still happening. Now, going back to my point about making a compelling offer, it often makes sense to see what else is on the table, and if the listing agent is willing to share that, and the timing of your offer. The timing of your offer is probably by far even more important. We find that when our clients make an offer on a listing within 12 to 24 hours after it hitting the market, there's a great chance that you're not fighting with many other multiple offers that just go completely outside of what's realistic. Often people get in this bidding frenzy and they start to bid. It's almost like it doesn't make sense. It almost like people try to bid just to be the winning bidder. Like when those 99-cent items on eBay get bid up like way outside of what they should be worth. Similar mentality sometimes comes into play with houses. Doesn't make a ton of sense, but I have seen it before where people get into multiple offer scenario and they try to just go way over asking. So the sooner you show up to the party, the sooner you're able to make a compelling, straightforward offer without many moving parts, without many concessions, something that puts the seller at ease, because the sellers in this market are often getting burned by people that are making multiple offers on multiple properties. And depending on how the contract is structured, the state of Utah allows for the buyer during their due diligence period to basically cancel for any reason. So it could be, let's say if your due diligence period on your contract is 14 days, that's the time that you have for your inspections, and it also gives you the ability to jump off for any reason. So imagine how frustrating it is to be a seller that has had multiple offers, and then sometimes, if not chosen carefully,
people get excited about multiple homes, and then sometimes after trying to offer on one after the other, an offer is not getting accepted, they get aggressive enough to where they get into the sweet spot. And sometimes they end up with offering on multiple houses at the same time and multiple offers getting accepted, which is a bad situation to be in. So it burns out the sellers, and the sellers often like to see, even your offer doesn't always have to be the strongest in terms of, you don't have to offer a ridiculous amount of money over asking, but if you give the seller some security in the form of maybe non-refundable earnest money or non-refundable portion of your earnest money deposit after just 3 days instead of 14, I have seen sellers that feel more comfortable. They know that you mean business. They know that you're probably not going to jump off. And if you do, it will happen within the first 3 or 4 days. So there's your golden advice in the event if you are getting in a scenario where you have to prove to the seller that your offer is going to be every bit as competitive and maybe even stronger in terms of security for the seller, especially if your buying power is limited by your pre-approval or the amount of cash that you're bringing to the table. Another interesting point for buyers is, what if you just can't find the one that you love? And sometimes across all price ranges in this market. So to give you guys an idea, when I'm talking about limited inventory, let me show you something. Our entire market has just 394 listings, and that's across all of St. George and all of Hurricane Valley. So out of 394 homes, often, even if you get up there in a price range, it is just tough to find the one you love. So what happens then? Well, it helps if your budget is over $1 million. If it's below, then sometimes you just have to be patient, and hopefully you can still find the one you love and you're ready to perform. If your budget is over $1 million, we work with several builders and developers, and we could, use more of a custom home approach, or we could find a spec home. Because of the supply crisis and uncertainty in economy and prices, a lot of builders don't advertise their spec homes on the market until they're about 30 to 60 days out from completion, because it allows for them to not have these wonky contracts. They're often single-sided and protect the builder more so than the buyer. So a lot of builders, which we have a great relationship with, don't advertise their homes on the MLS. So sometimes in certain price ranges, all the way up to the millions, you may be looking on the MLS and there's just nothing that you love. You just have to talk to the right people. We'll find you the right option. This leads me into some seller advice and some of the stats that matter most for the sellers. And even in this hot market, you kind of have to look at things of that nature. So if you're thinking about selling your home, you can expect for, median combined days on the market is around 13 days. So things go under contract really, really fast. And the total volume of active listings is really low, depending on the price range that you're listing it in. Anything that's over $1 million usually has a little bit more time in the market. Anything that's under, and once you get into like really low ranges, like anything in the $300,000 to $400,000 range, it just goes under contract basically within a matter of hours, possibly days. It kind of goes into play the list price for property, right? So depending on what price range you're listing in, you can kind of forecast, and you should definitely work with your real estate agent to figure out, with the comparable market analysis report, you could pretty nail it down pretty well to see how quickly homes in that price range are selling. So my number one advice is don't do it yourself. In this market, when people are looking for deals, or in any complicated market, when investors are looking for deals, they usually go off market, because an experienced investor knows a lot more about real estate, about buying and selling real estate, than somebody that's doing it for sale by owner. Even if you've bought and sold a dozen of homes in your lifetime, the market is dynamic. It constantly changes, and especially when things are that hot, you could think you're saving a couple bucks by avoiding hiring a realtor, not paying for commission, and potentially doing a great job. Yes, chances are you could do a great job, pay your own closing costs, pay an attorney to review your contract to make sure that everything goes smoothly. But in 9 out of 10 cases, I would say hiring a realtor would still net you more money, save all the hassle, and prevent you from tricky situations that can happen. Even though it seems like, selling a house right now is like shooting fish in a barrel. However, if you price this listing too high, you might stigmatize it and you might miss the opportunity for multiple offers. If you go after the wrong offer, you could spend more time. And with the uncertainty that we covered earlier in this video, there's really, you don't want to waste time because we don't know what tomorrow may bring. And, things may go up, things may go down. A lot of people are forecasting real estate crashes right now. I don't think that we're going to see anything as crazy as what we have seen before. But then again, a lot of things that are happening in the world we have never seen in history before. So my second point in my advice to sellers is don't overprice your listing. Overpricing your listing in a hot market or in any market really, is one of the worst things that you could do. So if you think your home has a potential to sell up to $1.2 million, but the median sale in your neighborhood and the median listing is around $950 or $1 million, you should be competing with those folks because chances are you're going to get multiple offers and you're going to get over that $1.2 million threshold. And I'm just throwing numbers out there, for example, versus thinking about let's just list it at 1.35 and then work our way down if we have to. So psychology of the sale too is when the buyers start to see you doing price reductions, they will think that you'd be willing to sacrifice even more if you really want to sell your home. So then numbers are working against you at that point. You're much better off creating a really attractive opportunity, where the home is priced just right per square foot, has the right amenities, and getting out of it much faster with a primary offer, a backup offer, and potentially offers over asking. So this approach typically works really well for all of our sellers. Another thing that may be very important for you as a seller in this market is a solid exit plan. Sometimes as a buyer, you actually have an easier way of canceling a real estate contract versus being a seller. So during the due diligence period time, as a buyer, you could walk away for any reason. As a seller, once you enter a contract and you decide that you no longer have a place to stay or you can no longer afford to move, it could become a lot more problematic and much faster than it is for the buyer to cancel the contract. So with a standard provision, if you don't have a way out, sometimes the sellers are really not sure where they're going to go, add an addendum that allows them to cancel the contract in the event if they can't secure a backup property. However, if you don't have that addendum in place and you decide to cancel the contract, the consequences may be as bad as you paying double the earnest money back to the buyer in damages if you had to cancel that contract. So having an exit plan when selling is a great idea because, it's great to sell in this market and chances are you're taking a boatload of cash and equity to transfer into something new. However, sometimes if you're looking to upgrade, it could just push you outside of the realm of what's possible. So sometimes people get too far in this process, they don't have something secured, and they're making a wrong move. So you want to make sure that this is not going to be you. And, my top advice for sellers, just hire a professional. Just give us a call. I will place my contact information right here, and it's all over this channel. We can meet for a free consultation. I'm happy to point you in the right direction. No obligation, no pressure. If it helps you relieve some stress off your shoulders, I'm here to help. I'm here to consult. Investor advice. There's a couple things that make investing in real estate probably not the best time overall, just given the market stats and seeing how crazy high, how crazy expensive things are right now. My number one advice, well, it's not really even my advice. That's advice in any market, really, no matter how challenging or how complicated the market is, do not try to time it. If you're thinking about investing in real estate and this may be your, better hedge against your cash losing value at the rate of inflation in the bank, you may be diversifying your portfolio. It might be your first real estate deal, or you might be doing a 1031 exchange out of something that you already own and you want to do it before 1031 exchanges are potentially off the table. Brandon and his friends were talking about that potentially no longer being a thing. So if you're looking at doing that, do not try to time the market, because the market will always run away, and it's really hard to time it to buy in a dip. And right now, so many people are pushing out so much information about different things happening. Hard to tell what it's going to be. Just drive, cost average your investments. And that leads me into my next point. So always try to look for a wedge deal. We talked about deals earlier, but with real estate investing, it's important to know what your rents may look like for single family, for multifamily. And if you could find a deal that gives you just enough of a wedge where if you had to, if something turned, if the economy got worse, you want to be in a position where you have room for better, best, and the worst case scenario, so that your rents are still covering your bottom line and you're still able to either cash flow or at least hold that property without the risk of loss. My next advice is realistic cap rate expectations. A lot of people are going into it, especially new investors or somebody that's new to the area, and they're expecting double-digit cap rates or something crazy high. Typically right now in southern Utah, if you could get to like the 5 or 6% territory, that seems to be kind of right in range with what's possible. However, over just the last few months, our rent rates went up pretty substantially. Let me show you guys. So to give you an idea, and this is just a three bedroom, 2-bathroom apartment or a home, a duplex in St. George. So sample size of 38 properties, and your average rent is around $2,000 right now. So to give you a better idea, we're looking at anywhere from $1.10, $1.25 to about $1.50 per square foot. So depending on the quality of the property, depending on the neighborhood and so on and so forth, you can kind of figure out what that is going to look like for a rental. Of course, there are some options with investing in Airbnb as well as multifamily, long-term, short-term rentals. All of those options require a separate level of research, and I would highly encourage you at least getting a basic understanding before you jump into something, so that you don't wait too long or you don't buy into a wrong deal. I feel like this live stream has lasted forever now that I've restarted it several times. Those of you that stuck around, thank you so much for your support. I am going to go through these comments and respond to some of them. Ryan is asking us on any advice or strategy on a second home purchase. What do most people do wrong? Right, that's actually a great advice. So, second home purchase, there's a number of scenarios where where things could go wrong with that, and usually the number one pitfall of second home purchases that I find is financing. Some lenders get really excited, and and I don't know. I don't want to speak badly about anybody, but I have seen it before where they set a false expectation about a specific lending product that may be available to you that is not. And second home purchases usually require for your DTI to be in a good spot, and so second home purchase is usually more expensive than a primary residence. Like, the rates are higher. And one other thing to look for is your Washington County tax rate is going to lose the discount. Like, typically, Washington County assessors assess your property at about 0.08, like almost 1% of the assessed value. And then if it's your primary residence, you get the primary exemption. So you get a 45% break in your taxes. When it's your second home, you don't get that break. So it's important to factor all those things in. But I would say another thing too, so there's a couple different ways to look at a second home. We have clients here that have Airbnb properties that they use as a second home. And that's one of those things where if you use it only part-time, you might come down for a few weekends a year. great way to build some equity in the property and have the property pay for itself and still have a place to stay in St. George. So there's a fine balance with that, or maybe just buying something that maybe you could buy cash. I feel pretty confident in our market, even though, it's impossible to tell what the future holds, but I feel that buying a second home in St. George is probably still much safer than holding on to that chunk of cash in your bank that's literally losing value by the minute, and who knows what the future holds. So real estate is still a lot less volatile than a lot of other asset classes. So looking at that second home as a potential future investment may be another good way to look at it. Ryan, I hope that that gives you some insight on that. But if you have any further questions, I'm happy to answer them for you directly too. Just give me a call. I am going to wrap this up. Thank you all so much for tuning in. If you need any help at all, you know where to find me. I will give you a view of my contact information again. Thank you all so much. I hope that you have a great rest of your night. Thank you so much for tuning in, and I will see you in the next one. Bye.